All right, guys, what a week it's been in crypto. Major gains throughout the markets. We have Bitcoin hitting that historic 100K milestone for the first time in a bit over 3 months, getting all the way up to 103.8K yesterday, currently sitting at about 103.1 at the time of this recording. Ethereum, though, being the big story, the altcoin, or at least runner-up coin, as many call it, the number 2 market cap in crypto, surged all the way above 2,000 and it currently is all the way above 2340 at the time of this recording. Obviously, it had a big upgrade yesterday that largely was due for at least a bit of a boost, but sentiment initially was quite negative after, a day or two of non-movement from the asset. As usual, retail kind of writes it off and says, all right, I guess the upgrade was nothing. No need to hold or buy more. And then as soon as they give up, that's when prices go through the roof. So we kind of talked about it in a video a couple days ago, how sentiment was looking particularly low after what was supposed to be a positive event. And, sure enough, we saw a big surge like we kind of saw coming. We called this one. If you guys want to check out our video with Equities Tracker, we discussed it right as the upgrade was taking place. So besides the top 2 assets, we can see plenty of other big stories. Lido staked Ethereum up 26%. This is just a wrapped staked Ethereum. And then Pepe here up over 40%. Memecoins was again a big story, as we've seen for the past 2-3 weeks, ever since the recovery following the early April tariffs really began. So we'll take a look at how the meme coin euphoria is factoring into this equation right now. And then, of course, we can see social volume up here. Bitcoin getting talked about a little bit more across social media, up 11.5% compared to the prior week. Ethereum, though, that's a big jump, 44% more discussions as people try to navigate what to do with Ethereum after it kind of was the underperformer among top cap assets over the last 2 to 3 years. And I'm not exaggerating. And finally had one of its biggest breakouts we've seen since arguably 2020 or 2021, where it eventually got up to around 4,800 and hit that all-time high. So besides that, we can see down here, the overall market cap has risen by about 3.6% in the past week. It feels like more, but remember that this is very much weighted by Bitcoin's performance, and Bitcoin is only up about 6.1%, still doing better than most. I know we're seeing tons of green in the top 100, but if we go, beyond the top 1,000, there's actually a lot of assets not doing much at all, and it kind of weighs it down a little bit. The overall screener volume, though, with the 4,000 plus assets that we cover, 177% more trading than a week ago. That's a massive jump. One of the biggest I've seen in a single week in a long time. So volume has picked up significantly, and you can largely attribute that to Bitcoin and Ethereum as usual. So in terms of the volume breakdown, you can see quite clearly the meme coin volume has just exploded here over the past, I guess I'd call it about 2 days. You can see, especially layer ones, largely due to Bitcoin, saw this massive spike in trading volume just as this green candle was appearing. And after this green volume spike here, showing the massive increase in trading volume, you get the inevitable cross above the coveted 100K line en route to that 103.8K return that we saw yesterday. So volume has just absolutely exploded. And this was the telltale sign right here, this little bump here, followed by a rise. And then as you would expect, just like in any cycle, the profits start to get redistributed into meme coins, more speculative assets. And yes, even Ethereum has benefited from Bitcoin being able to rise. So speaking of Ethereum, the overwhelming sentiment and conversation right now has veered over toward Ethereum, whether it's bullish takes or bearish takes. Everyone is chiming in on their opinions about the number 2 market cap asset in crypto, and for good reason. It finally had a decoupling moment in the sun after watching Cardano and Chainlink and XRP and Solana and all these other similar peers, if you want to call them that, even though they're smaller market caps. They all had their times where they've decoupled and had these small to very large pumps. And we'd still classify this Ethereum one as a mini pump because it's up to 2,300. It's not like it, 2x'd overnight to 3,000 or something. But yeah, it's notably higher than the rest of the markets right now. And so you can see how there's about half of the commentary is positive, a third of it is negative, and about 17.5 is neutral. That tells me this is still pretty polarized, and it's not a bad sign. Oftentimes we see a big social volume spike on an asset, and it's automatically a sign of a top while an asset's pumping like Ethereum is. But in this case, there's actually a pretty big mix of bearish sentiment and people not believing in this rise after the Pectra upgrade that just happened. So I'm curious to see just how far we can go here. We do have some other indicators that'll help us figure that out. So the blue here represents a lot of fear. People calling for sub 1,500 Ethereum, which we actually got briefly during this dip here when tariff fears were at their maximum. The red here indicates greed and people really starting to flood into Ethereum and FOMOing, expecting Ethereum to continue and to rise and rise and rise. And that's exactly where we are now. Tons and tons of people showing interest in $2,500 plus Ethereum. Yes, we still have some polarity as the trending tokens tab showed, but overwhelmingly, it does look like people are calling for the higher price more than the lower price based on where Ethereum now is at $2,300. So a little bit of a concern there since prices move the opposite direction of the crowd's expectations. You can see how much people got burned here calling for $2,500 plus Ethereum and just watching it go lower and lower and lower until there was finally kind of a consolidation between lower and higher. And then we rose, and then people get greedy. Precisely when they get greedy, we drop. Precisely when we get fearful, they rise. It's pretty powerful, guys. And then in terms of on-chain action for Ethereum, a little bit of a rise in transaction volume, address activity and circulation. They're up a little bit. Network growth is kind of middle of the road. Ethereum, for what it's worth, is always kind of one of the leaders in daily new addresses created. In fact, I believe it is the sole leader in that. MVRV is another one that we should keep an eye on because the 30-day MVRV is way past the danger zone, which is about right here. It's up at about 25.9% right now on average for wallets that have been active in the past 30 days. That's way above the already hot level of 15% or more. So I would expect that there will be a bit of a stagnant period or a bit of a small retrace just to get some of the FOMOers to scurry away because they've made too much money in this short period of time based on what is historically always going to be a zero-sum game. So we saw this time where they were in negative range. Now they're way in positive range, meaning there's higher risk if you're trying to buy into Ethereum right now. Now, on the other hand, from a long-term perspective, if you're planning to hold for like a year, this is showing that the actual returns are still well into the negative for wallets that have been active in the past year, as opposed to way high for just the past 30 days. So if your plan is long-term investing, it may not matter so much, even at this entry level that looks kind of high. Obviously, we'd rather be, when the average returns were at negative 35% here, just about 3 days ago, that would have been a great time to buy, obviously. And this is still showing we're below 0%. So not a bad time to buy, just not as great as it was. So you can use this analysis for any asset as long as it's an ERC20 or Bitcoin or Cardano. We have a few other assets where we do have MVRVs, even if they're not ERC20s. funding rates. Yeah, we're seeing a bit of longing right now. If we go over to the right, let's make it bigger. Yeah, so this bright green over here, that's a bit of a concern. So there is some longing going on, even on DYDX. And BitMEX doesn't look too bad. It's pretty neutral. But yeah, a little concerning because this is indicating some greed and people trying to open up leveraged and margin positions, trying to capitalize on this pump. Whale transactions, you can see a big rise in $1 million plus transactions. I believe this is the biggest spike of the year. So be a little concerned about that, considering the whales are becoming active after this pump happened. That could be a sign of profit taking. Let's transition to Bitcoin really quick. I wanted to point this out. So 10 plus BTC wallets still look pretty solid. They're accumulating. This includes, those top exchange wallets that are just there for liquidity, of course. If we want to go more precise, we can look at the 10 to 10K BTC wallets. And it looks so-so. We actually topped, I'll zoom in just a little bit here. We topped in terms of their holdings back here on April 24th, but they've kind of moved sideways. They haven't taken profit other than some of this volatility here, but they've climbed back up the last few days. So they've supported this rise. I'd still like to see them climbing at a bit of a higher pace so that they're accumulating as the prices are rising. But what is a good sign is this, the 0 to 0.01 BTC wallets, those micro wallets. I know 0.01 BTC is actually, a pretty good amount these days, $1,000, but this is still a good inverse indicator because historically when they are accumulating, I'll just hide the other two here. When they're accumulating, prices tend to struggle. You see very clearly between mid-February up until mid-April, they were accumulating, but prices were dropping and not really getting much stability to them. And then they finally changed their mind and started dumping after hearing about the tariffs. And once they started dumping, they just started getting regret after regret, if you will, because prices just pumped through the moon. And all of a sudden, we're back here at 103K. So yeah, if you want an inverse indicator to supplement the 10 to 10K line, I think that 0.0 to 0.01 BTC is a great combo to look at. A few other things on the Bitcoin side, looking at MVRV, yeah, it's up there too. It's not quite as scary as Ethereum's, 25% 30-day average returns, but plus 10% is getting close to that danger zone. I'll draw it here too, right about 15%. So if it gets above that, then you're really going to see a lot of tops historically. And unlike Ethereum, Bitcoin's long-term returns are at about plus 20% instead of in the negative. So there is a bit of risk on the short and long-term for Bitcoin. That's a little bit worrisome for all of crypto, obviously. We need to see Bitcoin holding up well. Don't be surprised if there's a period of stagnancy as people battle at the 100 to 103K level going into next week. That often can smooth out the MVRV over time without having to see a big price dump. But stay tuned. That's something to keep an eye on. I also wanted to point out that mentions of meme coins are a little higher than they've been in a while. That makes sense. We looked at trading volume and the spike going on. But look at the mention of just altcoins and alt season in general. It's just been a rapid rise over the past month with more and more people regaining interest in the more speculative assets, non-Bitcoin assets that kind of act as more leveraged investments that frankly are a bit more of a gamble. They're not like meme coins, right? They have actual stability. Meme coins are altcoins, but altcoins are not always meme coins. So, if people are looking at Chainlink and Cardano and some of the more popular altcoins with active development teams, then that's not so bad. But either way, we're definitely seeing greater and greater signs of greed, which is usually the case when altcoin mentions are rising at this level. I also wanted to mention the Bitcoin ETFs. We did an update late last week, or beginning of this week actually, and between April 16th and around May 4th, there was like a net inflow of about $5.2, $5.3 billion worth of money flowing into these ETFs. That's a great sign. We had one final drop where there were outflows, about negative 77.4 million, which wasn't much in the grand scheme of all of these big inflows. But that was the day before Powell spoke, and people were understandably unsure of what the FOMC decision was going to be. They ended up deciding to keep interest rates the exact same. And yeah, after the coast was clear and the result was what people thought it was going to be, we've seen more inflows over the past few days. So this is very much powering Bitcoin upwards. Institutionals have a lot to do with it. And the great thing about ETFs, now that we're almost a year and a half into their existence, we really can get a more transparent look at how the large capital investors are perceiving crypto day in and day out. So this is a completely free dashboard. Make sure to get it bookmarked if you haven't been monitoring it yourself. By the way, amount of holders moving down is also a good sign. It means that retail is capitulating and using this pump as an opportunity to leave and get out of crypto and basically donate their coins to whales and sharks that can scoop up more. Mean dollar invested age. Let's zoom out, actually, go back a full year. Yeah, so this is nice. Whenever this yellow line goes down, it's an indication that stagnant, dormant coins are moving their coins for the first time in a long time and causing the average age of coins that are sitting in wallets to move down. And that is a good validator that we're in the midst of a bull cycle. You can see throughout October, early October, all the way until arguably right around Trump's inauguration, where we hit that all-time high. That's when we were moving down, had a little bit more choppiness here. And then we go through this stagnant period where the average age is moving way up. And what do you know? Prices are plummeting during that time. Then finally, around April 20th, this was give or take 2.5 weeks after the maximal fear of the tariff situation, which is still a thing, by the way. We suddenly see a pivot and stagnant coins begin to move again. And right when that happens, literally that day, we get this green candle and then more green and a little bit of choppiness and then more green. And the mean dollar invested age is moving down and down and down. So I like the look of this. It's not like an aggressive drop like we saw in early November when Trump was first elected and everyone got hyped. But it does look like we're at least experiencing a pretty healthy amount of stagnant coins coming back into circulation right now. So that is promising. Anyways, overall, the picture from my perspective looks to be one that is painting some short-term topishness with some stagnancy going on just until some of the retail kind of pumps its brakes and doesn't have so much FOMO. That might already be happening for a few assets. Ethereum especially, there's just tons of FOMO, as you saw. But if we can get to a point where traders are taking a lot of profit here, and maybe they've just been dying to see Bitcoin over 100K for the first time in a long time, maybe they're getting rid of their bags so that realized profits start to go high again and whales and sharks' bags go the right direction. That would indicate we are on our way toward an all-time high and beyond. So this next week will be very, very telling as to whether we can get to that new historic milestone of 110K or above. It'll all depend on how much retail can kind of temper its FOMO. And obviously we need the S&P 500 to stay at least flat, if not continue to rise, because there is a correlation there. Tariff policies can surprise many and throw a huge cog in this wheel. But for now, things are looking pretty strong for the mid and long term as we get into the middle portion of 2025. In the meantime, stay safe, guys. Trade with as much knowledge and insight from our indicators as you can, and drop in on our Discord and say hi and ask questions anytime. We'll talk to you next week, and have a pleasant weekend.